Hey, good morning, everyone.
Morning.
Good morning. So today presenting of the pre-construction deal that I showing the all APS and then evidence of compliance, the file and statement of adjustment, interim or finals, right? That is the processing for that. So we're gonna be started for that first the APS.
I think Jenna was gonna start and then you're gonna.
Oh, okay, sure.
After.
All right, sure.
Yeah.
Okay. Hi, Jenna.
Hey, how's it going?
Good.
Jenna, I think you're gonna start and then Sam's gonna do the case study after. Is that the plan?
Yeah. Okay.
Yeah, that's perfect. Okay, let me get my screen shared here. Okay, can everybody see my screen now?
Yes.
Okay, perfect. So thanks everyone for joining in today. Super excited to get starting on the underwriting training with everybody. This page is just kind of overview of everything that we're going to go over in the, throughout the entire modules, but I just wanted to give you guys kind of a brief overview. Throughout the next few weeks, my goal is to get everybody fully prepped. Whether you are a completely new agent, I want you to be a fully prepared mortgage professional, ready to jump into a super busy career. So each week we're going to work through a module that touches on a certain aspect of the mortgage process. This includes like client documents, credit, structuring applications, AB and private lending, rates and terms, all types of income, including BFS and stated income, fulfillment, fulfilling your mortgages to being broker complete, as well as compliance. Again, this is not an exhaustive list, and I'm going to try and provide everybody with the topic at least a day or two before we have each weekly meeting, so agents can decide whether or not it's something that they want to sit in on. If it's something that they're already super experienced in, then maybe not, but if it's something that they want to learn more about, then they at least have a little bit of notice so that they can join in during the meeting. I would really like these to be super collaborative. I want to answer everybody's questions. So if at any point anyone has any questions or anything to say, please speak up and ask the question, add your information. If you think I've missed anything, I am happy to have everybody's input in any of these lessons that we're going to go through, all right? Okay, so let's get started with today's topic. So right now I want to do an overview of the entire mortgage process, essentially super high level from start to finish. I think it's going to put things in perspective that, things that we're learning into perspective so people can understand where each module fits into each category. Afterwards, I'm going to actually go into Expert Pro. We're going to run through kind of a very high level, how to create an application, sending applications to clients, that sort of thing. I think that'll be really helpful for new agents to kind of get their foot in the door so they know where to start. So I think of kind of 5 main stages of the mortgage process other than closing when I'm looking at a super broad overview. The first one is your client call and document collection. So I did a really, really detailed call, I think it was last week, where we went over your sales and discovery call, which questions to ask your clients, how to address when your client asks why I should work with a mortgage broker, what exactly are you offering me? So if that's something that you feel like you are missing out on, I definitely recommend you go back and watch that call. That's something I believe has been uploaded to the shared drive. Is that correct?
Yes.
Okay, perfect. So everybody can go back and watch that if that's something that they think would be, of value to them. We're going to go into the specifics of what documents to collect for each type of income, rental properties, all that fun stuff later on in other modules. The next stage would be underwriting and application creation. This is the stage in the process where you're going to take all of your information from your initial client call and document collection and put it all together into the application on Filogix and underwrite your loan according to the client's goals. Today, like I said, we're going to touch on how to create your application, and then we're going to get into the specifics of underwriting in the coming weeks. Your third stage in the overall process, once your application has been filled out and fully underwritten, you review the application as a whole and select your lender based on their criteria as well as the requirements for your clients. Most lenders have a pretty baseline for submission requirements like lender notes, so that's something that we'll go over in detail. We're going to touch on ratios, loan to value, insured versus insurable versus conventional, term, lender policies, all that fun stuff so that you can learn how to interpret what the lender is telling you in their policies and how to match that up exactly with your client and their application. The final stage that we're going to touch on is fulfillment. So after your deal's been submitted and approved, we're going to go over updating your Filogix application to match all of the terms of your approval, creating your compliance package, so your disclosure to borrower, amortization, all that fun stuff. We're going to learn how to read commitments from different lenders, exactly what they're looking for when it comes to fulfillment, what fulfillment is exactly. We're going to learn how to solve problems that are going to come up during the fulfillment process, answer questions to the lenders, and we're going to make sure that we have a very solid understanding of all of the documents that we're providing to our clients. Last stage again is going to be the closing. At this stage, we're going to learn how to ensure a smooth closing for your clients, add them to your CRMs, make sure that we are following up with them with regular intervals, renewals, that sort of thing, making sure that they are going to keep us in mind for their next mortgage. So all of the modules that we're going to go over throughout this entire underwriting training over the next 5 or 6 weeks are going to be included in one of these steps, and we'll make sure that I specify those at the beginning of which section that we're going to be in. So today we are going to focus on building our Filogix application from scratch. I know a lot of people think that it can be a super simple system, but it can be very daunting to new agents, which is why it's something I wanted to focus on right from the very beginning. It's good to see it in action. It's good to see somebody fill it out as you go along, and then you can kind of learn from there. Again, I would like to keep it high level. The first steps are going to be like actually sending the application to the client to fill out, filling the application out on your own, how to request documents, bank statements, how to use your client board. So I'm going to actually switch over to Filogix here in a second, and we will take a look. Everybody will just bear with me for 1 second while I get switched over. Okay, can everybody see my screen yet?
Not yet.
Okay, let's see. Okay, how about now?
That's right.
Perfect. Okay, so how many people have actually had a look and a chance to play around with Expert Pro? And is anybody experienced in just regular old Filogix? I know everybody on the senior team has, but what about the junior agents here? Has anybody had a chance to actually work with it yet?
Yeah, so I've worked with it a tiny bit.
You will.
Okay.
You know.
I have worked little bit, not,
Okay.
yeah, I have put my guess.
Okay, so mine is pretty empty right now. I've just got it set up over the last few days, but this is going to give you an idea of what you're going to be looking at. It's super helpful for tracking all aspects of what's happening. You can sync your calendar here. So as you can see, I have The mortgage agent training is in my calendar here. They kind of want this to be your go-to for everything, your CRM. You can see what you've submitted in the last 30 days here. You can see client activity. So you can see I've been playing around on here. I've created new applications. I've requested documents from myself, that sort of thing. You can customize all of this to what you want to see. So, you know, you don't have to have the pie chart, and you don't have to have, you can basically make it whatever you want. If you want, you can see your emails pop up on here if that's going to be the best thing for you. I've been trying to get my emails to sync. I haven't been able to figure it out quite yet, but eventually you can send emails directly through here and communicate with your client directly through Expert Pro. So it's kind of a really good one-stop shop for everything. You can customize the colors to the brokerage. So I've got everything set up in red here to kind of match the logo that we've got going on. But again, that's more of a personal preference. You can kind of do whatever you want here. Let's see. So board is kind of going to be your main touch point for all your deals. Every deal that you have is going to show up here, and you are going to hold it under a specific stage. So if this is a new lead, it's going to pop up right under new lead, and you're going to be able to access it directly from here. If I've been able to underwrite this application and I send it to lender, I'm just able to drag this over here. You can see it's really good for tracking the amount in your pipeline. So if I've got a few mortgages here, a few mortgages here, a few mortgages here, I can see how much, you know, I have in my prospective new leads. I'm going to say, oh, I've got $4 million in here in prospective mortgages. I better, you know, get following up. If I know that I've got lots in sent to lender, I can see what's in the pipeline and what I'm going to have closing. You can also make separate boards depending on the transaction type. Again, this is totally your preference. You can organize it however you want, but you can, you know, say, create, you can change the names. Let's say instead of compliance fulfilled, I want this to say broker complete. Change that, it's saved, and now I'm going to put this application under broker complete. Now I know that I've done everything I need to do. All I have to do is say follow up on closing. Now
This is all of the activities that you've done with this client, and you can have multiple applications that are synced with the single client. So right now I only have one, but if I was working on a purchase for this client and a refinance at the same time, both of those applications are going to show up under here. Let's see, it's going to show me any documents that this client has provided me, any campaigns that they're part of. So say I've set them up under a drip campaign, or you know, I'm saying we're doing a second mortgage campaign to try and get more business in, then it's going to show up under there. Any emails that I've sent are going to be able, they're going to show up under here, as well as I'm able to email directly through here. I can create a checklist for this client. So if I know that they're, you know, I want to say follow up with their lawyer, I can add a checklist here, and it's gonna, you know, add it there. And then I know once that's done, I've gone through with that, it's checked off. We can also go through and create activities here. So that's going to say, you know, let's say you have an assistant that's working under you, or even if it's just an activity for you. So we're going to say follow up with the client. I'm going to assign it to me, and I want this due tomorrow at, let's say 1 p.m. So now this is going to, once I gotta move this here. Once I create this activity, I'm going to get both an email into my inbox, as well as it's going to give me a prompt on my dashboard that that's my activity that's been created. When it's completed, I can go ahead and check that off. So that's kind of the overview of your board. There's lots of customizations that you can do on here and kind of make it your own. But I definitely recommend either using this or some other CRM for tracking, because when you get to the point where you know, are working on 5, 10, 15 clients at once, it's very, very easy to lose track of a lead that says, oh, you know, call me back next week. You dump that under your new lead, you set yourself a task to call them back next week, and you're never going to forget. Another category that we can use on here is referrers. So this is where you're going to put in your lawyers, your realtors, you know, your financial advisors, everybody that is, you know, able to send you leads. And that way you can associate those with your client when you go ahead and create their application. So there's a few ways that we can go and create your application. One is directly from your dashboard. So we can go ahead and create a client profile. Now, creating a client profile is not creating an application. It's just adding them essentially as a contact in your system. So we can go in and we're going to add him as John Doe, test1@gmail.com. That is all we need to do. That new profile is created. If you want, you can go ahead and add yourself a follow-up. Let's say follow up with John. We want to follow up with John on Friday at maybe not 7 a.m. That seems a little early. Let's go 1 p.m. There we go. We've got his email. If I know that John says, I'm buying $1 million home, I'm about to put an offer in on it, but don't call me until Friday. I want to punch in that that's $1 million. You know, that's a good reminder of what exactly we're working with. He goes default on my purchase board unless I set him otherwise. So it's going to bring you right up to John's client profile here. So we can see that I've got a scheduled follow-up with John. We got his first name, last name, his email, and that nice $1 million mortgage that we're going to work on. If I go check out my board, he should be showing up. Yeah, there he is. So he is showing up under new leads. Now, if we then are able to get John on the phone and say, John, let's work on an application. See, we have no application created for him yet. So we're going to go in and we're going to create an application for John's purchase. Now, some agents, this is totally up to what you decide. Some agents like to send their client a link and have them fill out all the information from start to finish on their own. Some agents like to get on the phone and fill it out with their client. Some agents like to request their documents and fill out the application from there. I think as a new agent, it's important for you to understand how to fill out the application, how to properly review your documents. And I think that getting on the phone with your client, asking them the questions, requesting them the documents is a good place to start. When you give them the application to fill out, I think there's more room for error because a lot of the time somebody doesn't know how much money they make. They don't know how much their child benefit is. They really have no idea. Some people don't even know what their actual address is. So I think it's always a good idea if you do give them the application link to fill out that you need to go through and you got to verify everything that they've filled out based on the documents that they're providing you. So two ways, like I said, we can send them the application to fill out or we can fill it out ourselves. This is a really handy thing up here. It's called the Create Request package. We can invite our client to fill out the application. We can request documents and we can also request bank statements through here. I do believe the bank statements costs money. Somebody may have to verify that, but if that's something that you want to use a lot, just be mindful that you're probably paying for that service. This one is simply just to fill out the application, or you can just simply request documents. So that's totally up to you. If you request for your client to fill out the application, then they're going to get an email like this. Can everybody see that I switched the screen?
Yep.
Okay, perfect. So this is what your email that you send is going to look like. Shoot, where did we go? There we go. So we can go invite client to complete application and request documents. So you can decide that if you're going to only send it to the main applicant, you can send it to both applicants if there is another applicant, and then you can. Okay, well, I didn't add any documents yet, so let's go in here and add the documents that we want to request from Mr. John Doe. Now this is under the documents tab of your application. If we know we need borrower ID, we're going to select borrower ID. And if you know that you want 2 pieces of ID, you can pop in here and add in 2 pieces of ID, front and back. So if you need to add any specifics, you can go ahead and do that. Oftentimes, instead of, being able to write 2021 T1 general, it's just going to pull up T1 general. So again, you're going to want to write, 2021 and 2022 T1 general, that sort of thing. Let's go in and add, or same thing with T4. Again, you can type out your own document type. However, they do have a pretty solid list here. But again, this is all customizable. You can go in and add these as well in your settings. So once you are able to add those, then you can go into your create request package, invite your client to sign, request your documents, select the client that you want to to send this request to. You can select the documents, say that we have 2 applicants and we know that John Doe doesn't have a T4, so we can remove him from there and we can only request the borrower ID from John Doe, and say Jane Doe, we know she has a T4, but we'll go back there and add him. Now you can customize an email here, or you can create a template. We'll get into adding templates at another time. There are so many little facets and details to this program. It's impossible to go through everything in one session. So we're just going to say, hi, please provide me with the requested documents and fill out the application. Preview email. This is what your client is going to see pop up in their email. So it's branded with the brokerage information, and then it allows them to create a profile. So like I said, we're here. This is the email that your client's going to get. So the first thing they're going to do is complete the application. I want to show you what this looks like on their end so that you can gauge whether or not you want to send this to your client. Some of them are more technologically advanced, some of them are not so much. So I've actually already gone through and created an account here just for simplicity's sake. But again, I want to run through how this is going to look on their end, and then how it's going to populate on our end. So over here, your client's going to see all of your information, your picture, your phone number, your contact info. They can easily copy your email there and go in there if you want. So again, here we go. We're going to, let's say, refinance. So every time you select something, it's going to change the questions based on your answer. So let's say I'm doing a purchase and I'm searching for a home. Now it knows we're going for a pre-approval in Ontario. I want to buy it for $500,000. And let's say I'm considering a $25,000 down payment. So it's automatically going to calculate 5% down for me. Say my husband's going to go on here. I can add him as another applicant, but we're not going to do that for now. Let's see, what information are we missing here? Am I a first-time home buyer? No. What is my marital status? Married. So they're going to go through here. Let's see if it'll accept a fake SIN. Now, your client may decide that this is as far as they want to get into the application, and they're going to go, okay, I'm done. I don't want to be here anymore. Take me back to the dashboard. So you are going to be able to see all of the progress that's been completed here. Now, if your client uploads documents to this application, again, it's going to ask your client to sign in. Now, the first time your client gets this email, they'll be asked to create a profile. It's very easy. You just, give a username, which is your email, and a password. Oh, I hope it's not going to make me fill out the whole application here. Okay, we're going to save and continue. Okay, so in order for me to upload documents, it's going to make me go through and fill out all of this. So that's what we're going to do, because I want to show you guys how it looks when we are, okay. 1, 2, 3. Street number 1 Toronto Street. Now, a lot of the time, if this is a new client that you're dealing with, they may not want to go through filling out all of this information, which is why it's sometimes best to, to have that conversation with your client on the phone. This is a super tedious process. All right, we're gonna give up on that there. So let's just say that my client has now filled out all of this information, and we're gonna go into an application that has been filled out here. So here's what your client's application is going to look like once they have filled out the information. So you can see, because there's no co-applicant, this box is, let's see. There we go. So no co-applicant, so it's going to remove all of their information. You won't be able to fill any of this out, but we're going to see that all of this information has been filled out here. So first name, last name, phone number, birthday, all that, they've included their driver's license number, and then that's as far in the application as they got. So we have a little bit of their income information, and we have their employment information. Let's see. What I want to do is fill out an application with you guys on our end, look at some documents, see where we would get that information from. So we'll go back into our pipeline here. So I'm just going to use myself as an example because it is, well, my name is an example because it's easier. So let's say you're discussing with your client on the phone, and they are a first-time home buyer. So it's easiest to run through this information on the phone, but you can also have them send you documents here. So let's say current job, employment type. Now, all of this information needs to be filled out. I know it seems exhaustive, but it's actually super easy. We are going to fill out everything as we go along. So let's just say, thankfully, Philogix Pro has address population, which helps a lot with, filling in these boxes. With regular Philogix, you have to go in and, type in all of the information. So I've had a conversation with, oh, there we go. It's even going to populate it with the employer name. So I've had this conversation with my client. I know she works as a mortgage agent with Kingsdale Mortgage Center. She is self-employed because she is technically a, she receives commission. So we're going to put her as a sole proprietor. Her job title is mortgage agent, and her occupation is a professional. Now, all of this, you want to fill it out to the best of your ability. If you know they're self-employed. If you know that there's a manager, in the government, you're going to put them as management. Again, fill it out to the best of your ability, and then fill out your income type. So I know that as a mortgage agent, mortgage agents make commission. Your industry sector is going to be, sorry, give me a second, guys. If we fill out all the information for the client, is there a way we send it back to the client to validate everything? That is a good question. I don't think so. Basically, once your client fills out the application, it comes to you, and you can make any amendments, but you can't send it back to your client. Again, you can't fully rely on all of the verbal information that a client is providing you. Everything has to be backed up with documents. So if your client says, I work for the government, I make $100,000 a year, sure, we can fill that into the application, but we're still going to go ahead and request their pay stub and their letter of employment at the minimum to verify that employment. Because your client, again, they could think that they make $97,000 and they only make $92,000. So we can go based on what they say on the phone, get their job title, get their number of years that they've worked there. But again, everything we have to verify with documents, because the lender is going to verify everything with documents. So, okay, let's see. Okay, perfect. So we're gonna go through again and just fill out everything possible. So banking and finance, income period is annual, and let's put the income at $50,000. So let's just say the minimum required amount for Trilogics is 3 years. If your client has only worked there for 2 years or a year, you're gonna go in and you're gonna add in another job, their previous employment information. So again, you're gonna fill out all of the same things, address, job title, industry sector, income period, everything, because the lender is going to require a 3-year employment history. And that's why it's always good when you're on the phone, ask how long they've been at that current job for and how long they've been in the industry for, because these are required questions in Trilogics. Same with time at residency. There's no residency here filled out, so I will fill this out here. If your client has moved 3 times in the last 3 years, you should put all 3 addresses on there because they are going to show up on their credit bureau. The lender is going to see that, and oftentimes, especially A lenders, First National, Scotiabank, they're going to ask what your client's association with those residences were. If you're not upfront about it, sometimes they have to put in, a condition for the lawyer for you to sign a statutory declaration that they've never owned this property, they don't own this property. If you're upfront about it, it will typically solve a lot of problems and it just makes things easier. So even if they've moved 6 times in the last 3 years, I think it's probably wise to just disclose as many addresses as your client's willing to share with you. Additional income here is going to be anything that's Canada Child Benefit, pension income, child support, alimony, anything that they receive. So let's say child support, and I know monthly I receive, say $500. That's going to add into my gross income. If I receive CPP, obviously I don't receive CPP, but we'll use that as an example here. And I know annually I receive $12,000 of CPP. Again, that's going to be added into my gross income there. Make sure that if it's not something specific like child support, if it says just pension, that you add in your additional description of what that is, because the lender does need to condition for the documents that are required. Assets, this is one thing that we went over on the phone, on the call last week about your discovery call with your client. Your assets are super, super important when it comes to, if you want to get an exception, maybe your client, their TDS is 45 or 46%. You're working with a bank who may grant you an exception based on strong assets. Maybe you want to use an equity program. So if your client has $500,000 in the bank and you want a mortgage for $500,000, there are lenders like Manulife, TD that will do a net worth program that, as long as you have funds that are equal to the mortgage amount, they make exceptions on GDS and TDS. So we want to be really upfront about what you have in the account. Again, make sure that you're honest about it, because when you do use your assets to get exceptions, oftentimes they're going to ask for proof of that. So if you have, $250,000 in stocks, they may want a recent statement showing your stock portfolio. Let's say you got a vehicle, you have and again, any of this, even if, say, you have a car that has a $50,000 loan on it, but it's worth $75,000, you can absolutely add that into your assets here, because that's going to offset the loan and it's going to increase your overall net worth. Now, liabilities here, this is where you're going to where credit is going to show up when you pull it. I don't have my Equifax credentials set up on here yet, so I can't pull credit for you guys, but if I could, this is where it's going to pop up. So we can go ahead and fill this out. Let's say you have a $500,000 mortgage and we have a $2,500 a month mortgage payment. Your maturity date, let's go October 1st, 2024, and then it's going to show up as like CIBC mortgage, something like that. another liability. Now, Filogix Pro is really great because it automatically calculates what your monthly payments are for revolving debt like credit cards. So if we have a credit card with a $12,000 balance, instead of you having to go in and manually calculate what 3% of your balance is, it's going to give you that payment immediately because it's a revolving card there. In case you didn't know, when you have debt like lines of credit or credit cards, you have to use 3% of the outstanding balance as your monthly payment. Again, if we know that we're going to pay off this debt from the proceeds, we can go ahead and mark it to be paid off from the proceeds. And if we're going to pay it prior to advance, say our client's buying a house and they know that they can pay this debt off before they buy it, we're going to mark it paid prior to advance. And we're always going to have to provide proof of this if it's coming prior to advance. That's something that we will touch on when we work on fulfilling conditions. Now, if your client owns a property, we're going to go ahead and add an additional property here. This is going to tell you whether or not we're including this in the TDS calculation. So if your client is selling and buying a home, if this is the home that they're selling, we're going to unclick this because we don't want to include this in your TDS calculation. We just want to include what's going to be in your subject property. So here we go. We're going to fill out our property occupancy type. So owner occupied, rental, whatever it is. Let's say it's a rental property. We're going to fill out our address information. We're going to put in our property value. So, let's say we bought the property for $500,000 and now it's worth $650,000. And your client, because you've had this conversation with them on the phone, that they bought it in say, 2015, January 1st, New Year's Day purchase. There we go. So now we've got all of the property details filled out for this. And then we want to make sure that we're including our mortgage and our property taxes here. So we're going to go annual property taxes. Let's say properties were $650. So we'll go $3,500. We have no maintenance fees because it's a single detached home. We're not going to include our heat fees here because this is a rental property, and heat's included in the lease that the tenants pay. Our monthly rental income, again, this is only going to pop up if this is a rental property. If I change our occupancy to owner occupied, then we're not going to have any rental income here, but we'll put it back in as a rental so we can see the example. Our monthly rental income options. So we're going to go, let's say $2,500 covers our mortgage payment. Now, this is where the underwriting comes into play. Most A lenders with one rental property, now take this with a grain of salt because they all have different, it is a 50% add percent to gross income. If you had more than one property, then you're going to have to get into filling out rental worksheets, which is again something that we'll talk on a bit later, but we'll just stick with 50% add to gross income. Scotia does something where they reduce the rental expenses and then they add the balance of the rental payment to your gross income. That's a huge help. A lot of the time, if you can't get your ratios to work one place, you can go to Scotia and use that. They're not going to include any of this into most calculations. That's what your rental worksheet's for. So typically we're just going to leave this area blank. And then we have an existing mortgage here. So again, we do have it filled out under liabilities, but we'll go ahead and pop it in here too. Balance remaining is 500,000. Frequency is monthly. Now, all of this information you should be able to get off of your mortgage statement, which is why it's important to request your documents upfront before you start working on the application. You can get as much filled out as you can based on your phone call with the client, but most people don't know their maturity date. Most people hardly know what exactly their mortgage payment is. They don't know if it's biweekly, if it's bi-monthly, if it's monthly. So it's always good, again, to get that backed up by the documents. If this is a loan that we're going to be paying off, we want to make sure that we fill out as much information as possible. But I think we put this in as a purchase, so we're not going to be paying. Actually, we can pay this out prior to advance because let's say we're gonna sell this property here. So now we have essentially your entire application filled out when it comes to all of your clients' information. We have their personal information, their SIN number, their contact information, we have their address, we have their employment details, we have any additional income, any assets that the lender's gonna wanna look at, their liabilities. So again, this is all gonna be pulled directly from the credit bureau. This is typically not anything that you have to fill out on your own. I'm just, putting some things here for an example for you. And then their property information. Now, every property that they own that's either in their personal name or in the name of the corporation that your subject property is in, other than commercial properties typically, is gonna have to go under properties owned. So if they own 10 properties, you're gonna have to go ahead and add 10 properties in here. It can be a little time consuming and document heavy, but it's important that you get all of the information correct. Now, subject property, this is something, the subject property is the property that you are doing the mortgage on. If it is your client's current address, I have this handy button here that says you can copy that from the current address. It fills all that out. Again, but it's not because we're doing a purchase. I'm just gonna leave that there. Is there an MLS listing? Yes. Typically, you can leave this information blank unless this is a new build. If you don't have an official address assigned yet, you will typically have the lender, the block name, and the township that you can fill in for lenders that you can get from a purchase agreement. Property details. If this is a refinance, you're gonna punch in the purchase date, the construction type. Is your home existing? So has it already been built, or is this a new property that you're buying? You're gonna fill out the structure in age. So again, ask your client when they bought the home, how old the home is. Google Maps is really helpful for things like this. When you forget to ask, you can Google your client's address. You can see, oh, it looks like it's a little bungalow built in the 60s. Give a general estimate. You can also check, Geo Warehouse if you have access to House Sigma. Lots of ways that you can find out the information that you need. But you wanna make a solid estimate, because sometimes this information is important to the lender. If they're gonna use an AVM or if they're gonna use a desktop appraisal, it makes it easier for them to order. So let's say, we're living in a 15-year-old house. You should know the difference between freehold, leasehold, and condo. So obviously, let's say we're gonna do a single detached home, it's gonna be freehold. Our property size, again, if you forgot to ask, give it a Google and make your best estimate. We'll go, 1,800 square feet. Our lot size, let's go 3,000 square feet. Property style, again, we'll do 2-story, single. The sewage type is super, super important, as well as the water information. So if you are on well and septic, you may have limited lenders that will deal with it, especially if you're going to the B or the private side. B side, very selective when it comes to well and septic, because typically it means you're more rural, but we'll go with municipal sewage and municipal water. Heating type, we'll go forced air, that's the most common. Number of units, make sure you're filling that out accurately. You have to, if you just have sorry, I think I got a question that I missed here. If you're applying for pre-approval, what are the mandatory fields? So if you're applying for a pre-approval, your property details, you can pretty much just, it's certainly weird. No, so when you're having a conversation with your client for a pre-approval, this is something that we touched on last week. You can ask, what's your price range? What kind of home are you looking to buy? Single, detached? Do you think you're going to end up in a condo, an apartment? That way you can estimate. You can leave your address blank when it comes to pre-approvals. You do not submit your pre-approvals with an address. And then again, give a good estimate when it comes to property details. Typically, these don't need to be filled out either, but it's good to know what your client's looking for. If you know they're going to buy a condo, you want to make sure that you're using estimated condo fees here. So that would be, there's your maintenance fees. So if your client says, yeah, I'm probably going to buy a condo, and the condo fees that, the places we're looking at are going to be $400, we want to make sure that we're adding in our condo fees. Most lenders use 50% offset for the condo fees. And if you know that it's gonna be a very, very small property, instead of using 100, which is the standard, you can say use 75 for your heat fees. That's something that always has to be included as well. But there's really no way to know 100% what your client's gonna end up buying. They may tell you that they're gonna buy a single detached home and then end up buying a condo. So you just wanna make sure that they understand if they're buying a condo. Okay, if they just wanna know what maximum they can be approved for, and then they make a decision whether to buy condo or freehold. Yes, yes, so everything can be left empty, but they do need to understand if they buy a condo, it is going to reduce the amount that they qualify for if you've gone for the max pre-approval, because those maintenance fees have to be added into their ratios, right? So if you max them out at 500,000 and they buy 500,000 with $400 a month maintenance fees, technically they're no longer going to qualify, right? Because that goes into their monthly expenses. Their ratios are going to be out of line. So it's always good to know what the client's buying. Make sure that, you know, if they're on the fence, let them know, hey, if there's a condo that you see and we've, you know, qualified you with no condo fees, send me the address. Let's qualify you, run the numbers based on just the the property taxes, the actual mortgage amount that you're going to have, and let's add in those maintenance fees just to make sure that you qualify before they go ahead and put an offer in. Pre-approvals are very, very high level. They do not review documents for pre-approvals. Again, you're going in based on the expectation of what the client's going to buy, and if they change their mind, you just want to make sure that you need to be aware of any changes that they decide to make before they go ahead and, you know, put in an offer with no financing condition, no inspection condition, and they have a, you know, sometimes your condo fees can be $1,200 a month, right? If they buy at the maximum of their pre-approved limit and now they have a $1,200 a month condo fee, it's going to be very, very, very difficult to get them to qualify. For pre-approval, no, when you submit, say, to First National or TD for pre-approval, they're gonna go based specifically on the information provided in the application. Maybe if your client is new to Canada, they might wanna see a PR card, or if, you know, the income doesn't make a whole lot of sense to them, they may request an income document just to confirm. But if you're going in and you're submitting a client who is, you know, both of them are salary, they've been working at their position for 6 years, it's very super clean cut, easy deal, they're gonna send you a pre-approval back, no questions asked. You're just gonna receive it in your inbox. So you wanna make sure that everything that you're presenting to the lender is as accurate as it can possibly be, because if your client comes back and now, you know, they actually aren't guaranteed hours, so you have to use a 2-year average, and their 2-year average comes in, you know, $20,000, $30,000 lower, then they no longer qualify because that lender doesn't do the due diligence on the pre-approval. That makes sense? Okay. Let's see. Yes, okay, perfect. Okay, so we want to make sure that we fill out the property occupancy type. Again, this is very important. If you're buying owner occupied, then you can get an insured mortgage. You put less than 20% down. You get better rates. If you are buying a rental property, you can include your rental income. See, this here pops up, and we can include $3,000 in our monthly rental income and what our offset's going to be. I know that pops up somewhere along here. But again, you need to make sure that you know what your client's looking to buy. If they tell you that they want to buy a $500,000 home and they want to put 5% down, great. You give them a pre-approval. Now they come back and they say it's actually a rental property. And but they don't have 20% to put down. This is just one of the questions that you want to make sure that you know upfront, so that your client can be aware of what the requirements are when it comes to buying a rental property or an owner occupied property, and what the difference in rates is going to be. If you submit for an owner occupied property, even with 20% down, you're going to get them a better rate. And then they come back and tell you that they want it to be a rental property, the rate's higher. So again, you just want to make sure that you have all the information. Here we are again. We make sure we fill out our condo fees if there are any. If heat is included in your condo fee, then you don't have to fill that out there. See, it's going to make that disappear. And then, like I said, typically your condo fee allocation percentage is usually 50%. Your purchase price, if you are doing a purchase, you're going to fill it in the purchase price. If it's a refinance, you typically fill in the appraised value or the estimated value. If you don't have an appraisal yet, just put it in under estimated value, check that off, and you can fill that out. That's what's gonna populate here under property value. Down payment details, this one can get a little bit, where'd we go? This one can get a little bit confusing for refinances. You always have to fill out the down payment details regardless of whether it is a purchase or refinance, a second, anything, but you're just gonna put your down payment, your existing equity as existing equity here. You can just fill it out again as existing equity, and you can put in, now this is a purchase again, so we're gonna go personal cash, we'll say saving, we're gonna fill this out as savings here. And the amount is 25,000. If I wanna break this up into two categories, say I have 15,000 that's coming from me, and I'm getting a gift, where we go? Personal cash gift, say gift from parents, then we're gonna fill out that 10,000. Again, it's important that we disclose the sources of the down payment, even if it's a pre-approval, because say that they're getting foreign funds and you tell that to the lender's gonna want the source of that most likely. You wanna make sure that it's nothing that's coming up last minute. If you get them pre-approved with a gift and then all of a sudden they've gone and bought this house, no conditions, and they have $20,000 coming from overseas, that may create problems for you. So you just want to make sure that you are aware of the down payment details and you disclose that to the lender fully. Where are we? Okay, these are your closing details. So you fill out your closing date. Let's go with April 30th. The date of your financing waiver, you can fill that out if your client has a condition for financing. So we'll go 7 days for today. And then you always have to fill out your purpose, whether that be purchase, it can be refi, it can be ETO, it can be second. It's just something that you always have to fill out on here. It will not let you submit without filling out the purchase detail. Okay, scenario. A client has lended money to their friend a month ago and he is getting it back in 2 months in the future near to closing. Would that just need to be entered in here or just mentioned as an internal note only? So with A lenders, you must provide 90 days bank statements to show the source of all of the funds from your down payment. You may get a lender who will, again, it depends on how much, but say you've lent your friend $5,000 and now you're getting that month back 30 days beforehand. It's likely that the lender is going to want to see that money come out of your bank account, going to that person, coming back into your bank account from that person, and some sort of signed acknowledgement saying that the money is repayment of a loan, that you do not need to repay that money, and that it is not a gift, it is a complete repayment, and they'll want a very, very solid paper trail for that. If it's a gift from a family member, they'll either want to see the deposit of the funds into your account and a gift letter. If you don't have the account, if you don't have the funds in your account, anywhere from 10 to 30 days before closing, they may want the gift letter as well as a bank statement from the gifter to show that they have the funds on hand. So again, all lenders have a different policy, but you do need to be able to source typically any funds that are 1% of the purchase price or greater, any deposits that are out of the ordinary. If you're regularly, they see your payroll deposits, 5,000 here, 5,000 here, 5,000 here, and then all of a sudden there's a deposit from $15,000, they're going to want to source that. So it's very important for you to review the bank statements that your client has provided you before you send them to the lender, just like every other document, and that you're the one asking those questions upfront so that you're prepared to provide the documents that are needed and that you're not dealing with anything last minute, okay? No problem. Okay, here we go. So, right, okay, so our purpose is purchase, and then this is where we're gonna fill out our requested amount here. So we know that our down payment is 5%. That's what we filled out between the gift from parents and the personal savings. And then we have to request this first mortgage here. Now we get a calculator here that does the math for us. We know that this loan is going to be 95% loan to value, so we have to make sure that we are selecting the insured button here. Now that tells us what our new loan amount is going to be with the insurance. So our loan amount plus insurance, the net is $494,000. When you're doing your underwriting, you can leave your lender information blank until we've gone through and fully reviewed the deal. Pretty much all of this you can leave blank for now because we just want to go through and fill out all of our rate type, rate term, and that is where it's going to populate our GDS and our TDS for us. So, what's the best rate for a 5-year fixed insured right now? Does anybody know?
4.89.
4.89. Okay, perfect. Okay, 4.89. Now, everybody knows how the qualifying rate works. It's either 5.25 or the contract rate +2. So I am going to say that it's going to be contract rate +2. So it will be 6.89 here. So our mortgage is going to qualify based off of this rate. That's what's going to give us our GDS and TDS. And you can see here, as soon as I popped in an interest rate, we can now see what our qualifying numbers are here. So our GDS is 63 and our TDS is 54. That's kind of all messed up there because I have rental income there that we've been playing around with, but typically your GDS is going to be lower than your TDS. This is going to give you the full summary for your application here. So it's going to give you the big picture, but we can keep filling this out. So we go fixed, closed, frequency, monthly, semi-annually. We're going for a 5-year term because that's the best rate that we can get. And because we're insured, our amortization is always going to be 25 years. Now you're asking, how do we select the rate details? That's something that we're going to go into more specifically in the next session. I really just wanted to go over the functionality of the product before we get into heavy underwriting, so everybody can have a chance to play around with this over the next week. But we will go over lender details, how to pick the right lender based on your client's income, how to pick the right lender based on their credit score, all of that later on in the modules. That's where things, that's where knowing your lender policies and knowing what your client's looking for in a mortgage is going to come in handy. You know, say your client, they want a 5-year fix because that's the lowest term, but they think they might end up selling it in 3 or 4 years. So we don't want to put them in a no frills, low rate mortgage because, you know, they may have a policy where they can't sell their property, right? So we're going to get into that later on, but this is kind of the very high level run through of putting together your client's application. I'm sure there's lots of things that we've missed, but in a way to check, you know, validate if you've played around with regular Filogix, it works the same as it does on Filogix Expert. You can hit validate and it's going to take you through everything that you've missed. Can everybody see that little pop-up there?
Not yet.
Okay, I'm gonna have to figure out how to share that. There we go. Okay, can everybody see that now?
Yeah.
So now you can go through this here and you can click on it and it's going to take you exactly what you need to fill out. So let's say borrower's marital status cannot be blank. So it's going to bring me to the section. What can you guys? It's going to bring me back to that section so that I can choose my marital status. There we go. So every time we want to see what we're missing, then we can go click through validate and pick exactly, you know, we can go through all of the errors and it's going to take us back until our entire application is full and complete. Once everything's finished, we're going to be able to submit through here. This is also where we're going to pull credit. Again, once I have my Equifax credentials set up, we'll get an example credit report to look at. We'll go through the lender submit details, and once we, have a lender picked, then we will, do a simulated submission. But I think that is just about everything that I wanted to go through with you guys today. Again, it's high level. It's really important that everybody goes in, I think, and creates their own application and learns the facets of it. What the little, they all have their own little quirks, things that may not be the most functional or the best. It's the same thing with Biologics or any other underwriting program that you're using. So it's the more practice you are, the more comfortable you get with it. Okay.
Yep.
All right. Was there any questions or anything that I can answer for anyone while we're here?
So I came just a little bit late today. So you want us to practice the Biologics on our own?
Yeah, definitely. I
okay.
think that even if you just go through and fill in your own details, and you go through and you validate and you make sure that you're filling everything out correctly, you can play around with the subject property information. So fill it out for your own house or try and put together a pre-approval for yourself. That way, when we get into more of the underwriting, then you're going to be able to you're going to have that application ready to be able to go in and play with GDS and TDS and paying off debts and adding in rental income and that sort of thing when we get later on into the training.
Okay, thanks. So
Thanks.
expert pro dot Biologics, right? That's
Yeah.
Yes.
okay.
Sam, did you get the ID and password from the Marcin? You got the Biologics Pro ID and password?
I don't think so. No.
Oh, okay. So, okay. So maybe you get the ID and password. Let us know. Then we're gonna be teaching again for you about the. We're gonna be set up next time for the special for that. That how to process the application, right? So I think yeah. So maybe the new agent doesn't have the ID and password yet. So we're gonna be scheduled the next time. Okay.
So I'll contact Marcin then. Okay.
Yeah. Later on yeah.
Sure.
Okay.
Sure.
Question from Mike. Do they have to list all the properties even if they may only own a share? Yes, that is correct. There could be 10 people that own that property, but if your name is on it, if that mortgage shows up on your credit bureau, you do have to disclose that property. But you do get to also include the full rental income on it. So it does kind of offset a little bit, but they will find out even if you don't disclose it, it's going to show up on your credit bureau. You do have to sign a statutory declaration with the lawyer that, you have disclosed all of the properties that are on the application. So it's better to just include it because, it's rather than them come back in an accusatory email saying, we found this on their credit bureau, or, we've Googled the client and we found this, why haven't you included this in your application?
All right. So anyone have a question? Nope. Okay. Okay, Jenna, thank you for the project today. Right. So yeah, probably the after section for the I just showing for the how do processing for the pre-construction. So I showing the APS and the evidence compliance, all the file. So I tally on the insurance over that, and then after that I have the case study 8, right? So okay, thanks, Jenna.
I just wanted to remind everybody again, if anybody's looking for a team to join, I am recruiting for my team. If you're looking for more, in-depth mentoring or training, my team is open. I'm interviewing, so feel free to, send me a WhatsApp or give me a call or an email, and I'm happy to chat with you.
Okay, thank you, Jenna.
Awesome, thank you.
I'm gonna be share for APS for the pre-construction deal. That is the one of the sample for I have it, but I mentioned for the team A and then team C that the Rex contacted the M2M condominium builder that Ilona told me that they tried for the some of the get the data, but a few some client already tried for the Scotia Bank, then they tried 10, right? Then they have approved just only couple of one, right? Or like another probably 8, they're gonna be sent to us to the following for the their client. Okay, so maybe if I have the data, then I share for the team A first, and then team B and team C. Okay. Okay, so this is the main case builder that the project name is the Sugar Warp. Okay, that is the tower. This should be, I got this one on the 2 weeks ago. Okay, so that is her name is the Jin Suk Chung. Then she bought from the her son. The son is I think it's 22 years old, something like that, right? Then I tried for the find it for the A-side lender, but he's just only graduate university 1 year ago, right? Then he just looking for the job, but he doesn't have the job yet. But maybe I try for the private first for stay 1 year. If we have a find the job, then I just transfer to the A side like TD, Scotia, or RFA, RMG, whatever, And that is a schedule showing that okay, the residential sugar WAP through commercial the marketing realty in that is this is their realty brokerage. They buy from the her representative for them, right? And then her property price is 619 $1,919 and dollar, right? Include usually they show for the parking and locker, but doesn't show here. Okay, so her deposit schedule for A, that first they when signing $10,000 they deposit. Within 30 days, that deposit 24,600. That is on those is 5%. So another 5% is September 7, 2018. Okay, that is probably within 30 days. And the other one within 60 days, another 5%. And within 180 days, probably another 5%. And then probably she normally in the kind of the different builder, usually 20 to 25. But Sugar WAF company is the main case. They require 25% down, right? So in here is a 20, then another 100. I think this is 20. So it's 1 year. It's then 1 year, right? So this should be 360 days. 360 days. They another 5% down. So total 25% down. Okay. Then and then schedule C. Then the purchase agreement. To pay the sum 6,920 certified check to the according to the schedule A. Probably I'm gonna be showing the later on the schedule A, and then purchase shall include the item set schedule D. This is the most to be builder like the same agreement, most to be same agreement. Okay, then they sign, and then the vendor solidaire, Donter Canada LLP. Okay. That is too big. Someone have a question? Okay. Okay. Okay, schedule A. Mostly the, I recommend it to your client when you buy pre-construction, have to review from the buyer lawyer. Sometimes they have a tricky about that because the mostly the environment fee or we say the levy or environment fee that because the I want to be environment fee have depends on city they charge it. So mostly I hope that they usually in the journal in the they are lacking the amount of the environment fee. So normally less than $10,000, right? But if you sometimes if you not is lock in, sometimes they charge more than $20,000, $30,000, right? So you have to mention to that your real estate, right? Ask them that is locking or not. But I have to tell most to be the request to the builder to locking for environment fee, right? That is probably schedule A showing for the environment fee that there. Sometimes schedule D. Most of it, that is around the how many pages? 42 page. That's showing the regulation for the builder side. Okay, so this is the sample of that, but most of it, the page 1, they showing the deposit schedule, right? And then another A schedule showing for that. And then I looking for the not this one. Probably I'm gonna be telling you. Okay, so this is the floor plan. So most of the minimum, most of the bank is a minimum 500 square feet. If we less than 500 square feet, then you have to negotiate with the underwriter, right? Sometimes the exception or not, right? But most of the Toronto downtown is almost 40 something. Sometimes I saw that 360 square feet for studio, right? So I have the one exception last time. So you have to look at it first on the lender. They not accept for the square feet less than 400, right? Sometimes it's the exception. Okay, so most of the lender is a minimum 500 square feet. Okay, so this is the 1 bedroom and then plus 10, 1 plus 10, right? I'm gonna be share for this document to on our the WhatsApp and that you have to if you have time look at it detailedly, but most to be the condominium regulation. All right, and this is the evidence compliance. That means that when you deposit I showed the first of the APS showing for the schedule, right? So when you $10,000 deposit, and then another 5% you deposit, right? Then they give it to evidence. That is the evidence of compliance. So this case, they have the 5 evidence compliance. So if you are 20%, 4 evidence compliance. So if you're missing the evidence compliance, then maybe you request the builder lawyer have to charge for another fee, like I think it's 500 or 600, something like that, right? And then lawyer spend the time to that. So minimum they charge the $1,000, right? So you have to make sure tell your client don't missing for that evidence compliance, because this is the source by you deposit, right? So then that is you have to show to the bank.
So this document our client would be providing us, not the,
Yeah.
Yeah.
You have to collect the all document first. So
Yeah.
APS first, right? And the evidence is sometimes they miss it because they if we're missing one, they charge around $1,000 from the builder lawyer, right?
right, so why would they be missing one, or they just don't have an updated?
Because
evidence
yeah,
compliance?
because probably they mail to the client, right? So sometimes client move to the another place, you know. So if you have the mailing address, the client have to report to that builder lawyer, right? Because they always send it to the copy of them, right? So if you
So-
request
So they might incur a cost
yeah,
to get a new one.
New
if
one,
they
right.
don't- If they're
because
missing in the.
because the lawyer spend the time to printing it, whatever, you know.
Oh, yeah.
Yeah, that's why they charge the $1,000, right? Right. Yeah, even when you want, they have the one-time change that the name change when you are entering closing, because the lawyer have the most to be builder lawyer ask about who is the owner, right? So you have to one time, if you one time change, they not charge anything. But if we change it 2 times, maybe minimum $5,000 they're gonna be charged to you, right? So making sure that probably they you have to ask a realtor or builder lawyer to maybe change the another name or whatever, right? Then they have the fee might be charging it, right? So you have to decide before have to change the name. Okay, so because this case that the owner buy first, then they change the name to son, but that is in problem is the HST, right? If we change the name before closing it, the probably son have to pay HST first, then they credit $24,000, right? But if we owner occupy, we didn't pay anything about HST because the builder, they already charge HST include, right? But when not change the name, right? Or not owner occupy, you have to pay different amount about HST. For example, like I told you before, the $500,000, that is the 13% is the 540. 54,000, 13%, no, 65,000. So when they owner occupy, if we change the name, right, you pay $65,000 HST, then you can get credit 24,000. Okay, so normally if we owner occupy, then you save $41,000, value about 500,000. Or if you change the name, or other people like you can edit the name is okay, because you are one owner, then you can edit a son or husband or wife, right? But if you sign first, owner was you, and they change the another person to owner, right? You have to pay 65,000 first, then give it credit 24,000. So you lost 41,000 dollars.
So you're paying HST twice, basically?
No,
because
it's
you're
not.
switching-
It's not
No.
twice, just only give, when you own occupy, you not pay anything about HST. Because that, when you purchasing it, they include
Oh,
about
okay,
HST. But when you change it, not you, might be your son, right?
Right.
If you have a son that son buy, you change the name, you pay $65,000 paying, then got the credit, $24,000 money back, right? So
Okay.
yeah, that is be careful. Most of the client doesn't know about it, right? So making sure if you owner change it, but it's okay to the adding of a person, right? Because the owner is the same person, right? It's okay. But owner is changing, or son's name, whatever, right?
So a better strategy would be to add the person, then later on, after they occupy,
Right.
to remove yourself from the,
When you get the mortgage, because it is when you're closing it, right?
right,
Yeah, so CRA doesn't want to owner change.
right, so. But if they take, so you're buying it for your son,
Right,
you buy it, you put them on
right,
title as well.
right,
And then after you get the mortgage and everything settled,
right.
then
To
can
cut
you
the-
not take yourself off title?
Yeah,
And that
It's
would be the
possible.
best strategy, because
That's
then
right,
you're
that's
not
right.
going to incur
Right.
further charge.
You're right.
Yeah,
That's
so that would be a better
knowledge about-
strategy.
Yeah. Or before the interim, change the name
Yeah.
for give the son whatever,
Mhm.
He buying the first before the interim.
Yeah.
They not charge anything about the fee, right?
Right,
Then change the name
they
for the
might charge
son.
$5,000 to do the name change, but not.
Yeah, after the
HST,
interim,
yeah,
before the changing the name is the lawyer just only develop the lawyer, change the owner name, right? Yeah, something like that. Amendment for one document,
Yeah.
right? Change the name amendment, right? Okay, so the evidence compliance, that should you have the check it for the each day. So they have the because I'm gonna be showing the first one. You have to make sure the date. So what day is this one? This one is December 13, 2018. Okay, so okay, this one December 6th, but they issue by December 13. That means the builder deposit this day, but they give it to the check issue is December 6th, right? So you have to make sure that this check by this one, all right? Yeah, so you have to compare all check you have it, right? Then because the bank already checked for the compare of that, right? And how many I have. And this is they showing the occupancy date here. Form occupancy date is February 9. Right, so should be they have the that is the interim closing. Okay. Okay, so that is the day they occupy. So when you occupy, I showing the interim statement. Oh, this one too, because this one is the this is the owner of the between the part is the her purchase name is the Mrs. Zhang. Then they transfer to that Soljan is the son. Okay, that's why they amend for the son's name, right? So just to transfer it. Okay, this is a transfer document. Okay, showing for that I'm gonna be posting for and that their ID, maybe ID is too big here. I don't know. Yeah, I probably ID. Yeah. I don't know why it's too big. Yeah, it's passport, I think. Right. Yeah. Okay. And I want to show the statement adjustment. This is the statement adjustment. This is the interim statement adjustment. We need a two statement for the one for the interim, that is the owner occupy same day, the showing that the February 3rd, 2023. Okay, that okay, that's the interim statement. The purchase price is here. Okay, sales price. Then and then at that time they're gonna be paid for the another 5% another payment, and then we just showing for the first check for schedule here. Okay, so there's a check deposit 6,900 that. Anyway, I saw you do before. Oh, here, okay. The sum of money for this one for the interim closing showing check deposit this one, right?
Yeah.
Yeah. Okay, so you have to compare for that. Okay, this is the interim statement. So okay, so I got another final statement. Okay, this is the final closing note that the fax to the lawyer is March 23rd, 25th, 2024. So the next week. I think I got the email from them, the one I got the yesterday for the final statement. Just so that I just checked the email. Whoops, please. Yeah. This is a final statement adjustment. The price they price, and then they have a vendor credit. They don't have any vendor credit. Locker, they don't have a locker and charge. And the total price this one, and then GSHST the 82,000, right? So so interested the deposit this one, occupancy, and so they deposit 6,920 that I showing to you, I already showed to you, and then the real estate tax. This is approximately each all unit they charge. So this is 3,232, and then vendor, because the day of the adjusted for 2024 is probably today is they're gonna be closing March 25th, right? So it's January 1st to March 25th. This is the vendor they pay, and then this one March 26th to December 31st. This is a client pay. Okay, so first year, the pay to that, because the first year, when you closing it, they pay already for property tax bill. So this is a vendor pay. This one is the client pay. All right. So should be minus this one is the client have to pay this amount on closing day. Okay. And then common expense for the unit, that is a maintenance fee, right? So every month minimum $537 they charge. Okay. So when you because when you fill it the file logics, you have to put in the maintenance fee should be this amount. Okay, and the property taxable is a monthly maybe total amount of this one. Okay, because we don't have any property tax bill from city, so using for the statement of adjustment. Okay, for the DC4 property tax bill, this is the maintenance. Occupancy fee, right? So that is a charge from the builder. Okay, so increasing in development the charge, purchase agreement. This is a municipal obligation. That is the city charge for the builder, like the environment fee, something like that. Okay, Tarion is an insurance company that they pay amount that 1,130. Okay, and the water. Deposit compliance for the vendor, a lawyer charge. Okay, legal fee, condominium registration fee. Okay, you have to look at it. So, okay, so finally, this amount is a total tax, everything. Okay, so she bought the price first amount of this one, right? So almost to
almost 50% more.
Yeah, because of that
48
is the, yeah,
40% more.
right. Tax, everything,
Yeah.
involving that, right? So 30% tax, environmental fee, something like that. So look at it, how much difference. So when they sell to the property, minimum those amount they're gonna be at the sale price, right? So yeah, but I think in the market, I cannot believe that this amount to pay for under sugar rough. So probably I know about the this client by square feet like less than $1,000. Yeah, around $1,000 they buy. The actual she spent the money for that is around the 14, I think 1,400.
Hmm.
1,400 amount, right?
Is it typical that the builder charges the buyer all the hookup fees and everything else from the town in these?
Yeah,
Yeah.
yeah.
Builder pays.
There
Yeah,
are all
even-
kind of situations.
Yeah.
They won't tell you upfront, right?
Yeah.
All that shows.
Yeah. So those are about the document I say that, right? Then the everything you collect the document, and then even after that you got the application form, and then checklist to which document you need from client, right? Then wherever all collect, then you submit the file logics, get approved, right? So those kind of processing, right? So most of it the pre-construction importance the interim closing. So whenever interim closing, then I my opinion is that the time collect your all document, except the income document, right? Just only the pre-construction document. Then because sometimes the builder give the notice the less than 1 month sometimes, right? So you have to check when they probably this is experience that I know. I told you about when you build for the 60 floor or for example, okay, just easy to calculate for the 30 floor, right? When your client bought the middle 15 floor, then occupancy is might be June, this over June, right? Then one of the client start over the first, that was the they got the interim closing notice for the 2 months ago, right? Probably on the 15, under the first floor to 15, just wait to two months, right? So when you got the on end of the floor, might be after 2 months, they got a notice from the interim closing, right? So think about it. So you have the time for only when you finish that occupancy, then they start again to that register. So when you register, almost the lower condominium, that one day they whole unit that registered. But when you have the more than 500-600 unit, they just floor to floor, like the 1 to 8, 9 to 15, something like that. But that is only 1 week to 2 weeks, right? So you have to calculate to let your client to know about it. So you have to prepare before, mostly before the closing, minimum 2 months we need it, right? Yeah. So because sometimes the lender, they are busy, whatever, probably, in the turnaround time for the get started to the end, mostly I spend 1 month, right? So I don't want to rush to the client to look at it. So probably we have the a time for before closing for the 2 months. You have to start it before 2 months. Okay. Okay, so done for today for the pre-construction. If you have any question, let me know.
How about when the client is buying the
Mm.
unit initially? The builder will require mortgage. Let's say they say if the financing, if he has financing.
Yeah.
So do we provide that?
What I mean that.
So let's say,
yeah.
you know, the client wants to buy a pre-construction project.
Right,
They give the first deposit,
right.
but the builder asks for financing if he's approved for mortgage.
You mean the pre-approval letter?
I don't think so, the builder, they don't ask, I don't think so.
No?
Yeah, so some
Some
builder
ask,
ask it,
yeah.
right? So if someone ask, right,
Yeah,
that we can provide the pre-construction deal
yeah,
to like a pre-approval. I can give it the pre-approval letter
Yeah.
because some of the lender they accept,
okay,
right?
yeah.
But sometimes sometimes they request the income document,
Mm.
mostly not,
Mhm.
right? But sometimes but TD they because TD is not they hire from the First National
Mm.
underwriter,
Okay.
right? Now the TD underwriter must be financed the First National underwriter team, right?
Okay.
So when I was started the TD, they not require for the document,
Mm,
but First National
yeah,
they require the income document.
okay.
But you can get the document, just only income document,
Okay.
right?
Yeah.
Then I see it, right?
Mhm,
Then probably I send the Acro Bank or IC Bank
mhm.
to give it the pre-approval,
Pre-approval.
right?
But
Then
we don't get any commission on that, right?
no,
No,
free,
free.
yeah,
So-
free,
free.
because we spend the time 2-3 hours. But I know that some of that agent
Mhm,
they charge it $300 to $500
mhm.
for deposit,
Okay,
right?
yeah,
When you want to come to me,
Yeah.
Mm,
then you get the commission, right?
Yeah.
Yeah.
Then we're gonna be money back,
Mm.
something like that.
Mhm.
Yeah, sometimes I do like that too,
Yeah.
right?
Mm.
So because we spend more than 2 hours
Yeah.
Yeah.
to working on,
Yeah.
it, right?
Work on it.
So you have to deposit,
Yeah.
right? So when you get the mortgage from me,
Yeah.
I return for that they want, or yeah, I
Yeah.
need to, or the money back,
All right.
right?
Something.
Yeah, something
Yeah,
like that.
yeah.
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 So because the minimum 2 hours spending,
Right.
right?
Mm.
Okay.
And then that stays for the duration of the construction.
Yeah.
Okay.
Depends on the how faster,
Yeah.
but we give it to the construction, actually in the RMG,
Mhm.
right? RMG, I guess they have it showing that the 6 months or 1 year, right?
Mm.
So we can hold the 1 year.
Okay.
Right. Yeah. Okay. So now, no question. So we gonna be go to that. What do you think? You wanna be start for the retire or not? If you gonna do case study? What do you think? Maybe we spent too much because of 1:30, right?
Yeah.
Yeah, probably this case study are gonna be postponed next week.
Next week. Yeah.
Okay? Yeah, so okay.
Okay. Yeah.
So have a nice day. Do you have any question? Oh, here. Okay.
So Sam, you mean we have to complete the case study, or we're gonna go over it together and do it?
You're gonna do it for the now, but I'm gonna be if you wanna answer, I give it to answer. So just
Okay.
yeah, if you want to know about it, give me a call or give me a chat, right? So I'm gonna tell you about it, right?
Yes,
Oh,
but it is good to work on those on your own and do a mock-up. And you can always share that or whatever.
Right.
It's not about getting it right or wrong, it's about
Yeah.
doing the work, yeah, like practicing. So
Okay, so we'll go over it next week, you said, or when, Sam?
Yeah. We're gonna be for the next week.
Okay.
All right? Okay. Okay, thanks.
Thank you.
open the tool.